Fina freaking Lee. Finally. You guys know why I am saying Fina to the Lee. Software might be back. I don't want to say it, but on a day like this, it's hard not to say it. Probably going to go down again tomorrow, but on a day like this, you've got to say it. Software might finally be back. It has been 2 long months of seeing every single day the software stocks go down. Today is a different day. Snowflake, 40%. Datadog, 3%. IGV, the software index, up 3%. Palantir, 8%. Zeta, 4%. ServiceNow, 8%. Shopify, 8%. Reddit, 7%. Finally, we are seeing potentially the software come back. And there's a couple things that happened in the macro today and with the AI stocks that make today's software rally actually even more impressive that we're going to talk about. But we might be finally seeing a little bit of a comeback. But it's not just software. Mr. Robinhood is up 10% on the day, diverging from BTC. And SoFi is also up on the day at $17. I think it's literally been a month and a half since we've seen a $17 handle on SoFi. SoFi right there up 5.2% on the day. But it's not just software and fintech. It's also semis. Nebius up 10%. CoreWeave up 3%. NVIDIA got to 215. That's now up 1%. Micron's barely red on the day, but still holding 900. SMCI up 9.3%. Dell, that has earnings, up 4.3%. Oracle cracking through the 200s finally after 5 months. That's up 7%. The S&P 500, a new all-time high. It feels like maybe, just maybe, the rally is actually broadening. I don't want to get too ahead of myself, but the level of the magnitude of the velocity of the move that we're seeing right here, it's not just that it's happening fast, it's happening with a level of volume that is very intense. And you can see it if you look at the volume profile on a lot of these names, and that's part of the reason why they continue to pump into the close. It's pretty damn impressive. I mean, AMD was trading at 527 at one point. That's at 519. ASTS, new all-time high, 133. Rocket Lab was red last time I checked it. Rocket Lab basically flat on the day, 149, just below 150. It's one of those days where you're actually seeing everyone participate. And I think there's a couple of reasons for why everyone's participating, but it's nice to see. It's really nice to freaking see that we're getting some love. Microsoft right here. Did we touch 430? We were at 426. We almost got to 430. Meta didn't really participate today, but at least Meta pumped yesterday. So that's why you're seeing some of that green sustain from yesterday. Now, why is the rally today that much more impressive in terms of what we're getting in software? And again, by the way, you're not really seeing the semis go down. Some neoclouds, some semiconductor stocks obviously aren't blistering green like they have been over the past couple of weeks, but it's not like software is going up and semis are going down. And that's a very important thing to understand today, because maybe that means there's not a rotation, there's a broadening. And yes, there will be some liquidity that comes from different sectors in order to fund the rotation, but it doesn't mean those sectors have to necessarily go down for the other sectors to go up, at least in the eyes of the market today. S&P 500 at all-time high, 754.87. The reason the S&P is at all-time highs, right before I left the market open, there was a report from Axios, has not been confirmed yet by the president, but the report was that the United States and Iran have reportedly reached a 60-day ceasefire, and Iran will start opening up the Strait of Hormuz for the next 30 days. We don't know if that's official, but at least we have some reporting that it might be happening, and that's why you're also seeing a bit more momentum right there across the entire market. The other reason why this software rally is uniquely impressive is because Anthropic raised $65 billion today, nearly $1 trillion market cap, $965 billion. It's kind of crazy, but this is the nature of the market that we're in. Number two, they put out a new model. Opus 4.8. And so on a day where Anthropic puts out a brand new model and has all the momentum with the capital that they're raising, and the market still decides to buy the sector that Anthropic is supposedly going to kill, I mean, this is why I actually think it's not that crazy to say software is back, because on a regular day, if Anthropic put out, by the way, did you guys see Figma? Look at this thing, 9% on the day, 23.35. They got an upgrade today by JP Morgan for $45. I think if the market's ready to buy the stocks that are supposedly going to be killed by Anthropic, even though they released a new model, which in a day in April would have destroyed the software stocks, that means maybe the market sentiment has changed. And if that sentiment has changed, nothing has changed with the companies. The earnings have been phenomenal. As long as the earnings continue to be strong, sentiment changes, maybe capital will be rotating as well. Robinhood. Now, Robinhood is diverting from Bitcoin today. There's two big things on Robinhood. Again, the agentic stuff they introduced yesterday was important. The Trump accounts today, you know, that headline kind of went viral. I mean, we've known about the headline for a long time, but I think the street kind of woke up and was like, oh, these Trump accounts are a big deal. And I think they will be a big deal. They're not going to change the AUM or the trading volumes overnight for Robinhood. So I was even surprised by the level of the move today, but I'm not complaining. It's nice to see a 10% move and Robinhood getting back to levels that it was at before earnings. If it can hold these levels and maybe Bitcoin can recover, then maybe we can say goodbye to the 70s. Maybe SoFi can say goodbye to the 16s. But I also think Robinhood is just pumping because fintech and software is going up together, and that's why you're getting a little bit momentum. So not too bad. Not too bad. The semiconductor all-in bulls have had a really good month. You can't be too upset if you're in Micron and it's down $3 on the day. You've had a very good run, and this run will likely continue, but it is nice to see some more stocks get a little bit of love. ServiceNow hit 110 on the day. That's at 108.70. You got Circle. That's up 4.8%. Apple basically at all-time highs. OSS, $18. That's green. And then Snowflake, unbelievable rally, 239, as that one has continued to make a massive move. So not bad. Not a bad day. We got two headlines from Iranian state media. The IRGC Navy fired warning shots near the Strait of Hormuz at 4 offending vessels that intended to pass through the Strait of Hormuz without coordination. The IRGC Navy fired warning shots at 4 different vessels near the Strait of Hormuz. Okay, so that's the headline that we're getting in right now, not really affecting the market too much. Again, Trump didn't really give more comments this morning in terms of what's going on with Iran outside of that Axios report that we got. And hopefully we will get more details soon. This is what Besant about Iran when he was asked about it. He led the press briefing today, and this is what he said in regards to the Axios report.
On the table?
Sorry?
Is there an agreement with Iran on the table?
The teams have been going back and forth, and President Trump has made it very clear, he talked about it at the cabinet meeting, that he has several red lines. And Iran has to turn over their highly enriched uranium. They cannot pursue a nuclear weapon. And the Strait of Hormuz, back to your question on energy, has to free transit. Navigation of the seas has to be free and open as it was before. So he's not going to take a bad deal. He's going to make a great deal for the American people. So, Peter,
thank you, Dr. Besson.
Yep.
How long until we see your signature next to President Trump's face on a $250 bill?
Well, again, as Treasury Secretary, I have 2 mandates for U.S. currency. At present, no living person can be on U.S. currency, and the currency must say, "In God we trust." So right now, there is proposed legislation in front of the House, in front of the Senate, to change the first requirement so that a living person.
So that Washington Post article might end up being true in terms of Trump getting on the $250 bill. But in terms of the Iran stuff, again, Besant didn't really give any major details in terms of how this thing is going to be resolved right now. So until we get some clarity on that, I'm not sure how market's going to be able to fully price it in. Oil's still below 90. And again, the reason we pumped in the morning from 750 to 754 was on this Axios headline. As long as it's affirmed or confirmed over the coming days, then, hopefully markets will be able to move higher. But obviously we're still having a pretty good day, regardless of some of the green that we're seeing in all these different sectors. So not a bad day, folks. Not a bad day. Now, is it going to last? I don't know. This market has been very tricky to navigate. Maybe software is up today, fintech's up today, and then everything's down tomorrow. But it seems like a more broad-based rally. I mean, even Marvell, that was red in the morning, 205, that flipped green. ARM got to freaking 349. Now it's at 334. AMD 517, ASTS 133. Just massive moves across the board. All the drone stocks went crazy today because Trump is potentially investing in those drone companies. Ondas 23%. I mean, you had a lot of sectors, a lot of different catalysts, and obviously that helped a variety of different market participants. Iran, not sure why that was down today, 63.94, down about 5.7%. Don't really have a headline on that. It was green yesterday, so maybe a sell the news from the green that we had yesterday. Nebius, obviously that Leopold acquisition definitely got the street excited. Brad Gerstner was on today, and I found it kind of interesting when they asked him, "Hey, bro, are you selling your Micron?" He didn't literally say it, but he basically said it, making the argument that, yeah, it is time to take some profits right here. And the guy manages a lot of money, so obviously, he's going to have to take some profits. But here's what he had to say, and this is kind of how he made his case for navigating these markets right now in the context of the AI trade.
For our shareholders, that was the right thing for us to do. even though today is an absolute spectacular, well-deserved blockbuster day for Snowflake.
So a couple things. So you're not taking any profits, for example, in the Micron, given the crazy move that we've even seen since we last spoke, just as you said 2 weeks ago. Let me deal with that first, and I have another question about Snow and Databricks.
Great. Yeah. So yes, we are actively managing our portfolio, Scott. I can't give you every tick and trade, but I will say with these parabolic moves, we absolutely are making sure that we're taking down some of our exposure.
AKA, yes, we're selling some Micron. We are quote unquote actively managing our portfolio. We are taking down exposure on parabolic moves. That means yes. He doesn't want to say it, but that means yes. And by the way, that's probably the right thing to do for someone who manages professional money. But the point is, you do have active fund managers saying, yeah, this thing has gone kind of crazy and we're taking some profits right here. Now, for him to take profits, someone has to be buying it. The question is who's buying it at these levels. And maybe it's still a good deal at these levels. Time will tell. But I would imagine some of the other institutional investors that have made so much money on names like this are probably taking off some exposure.
In names that exceed our price targets, rotating it into other names. But remember, on the All In Pod, we have this phrase, let your winners run. So a key in this business is that you got to let the best companies continue to compound. You've heard me say it on this show before, a simple heuristic for the people watching at home. Think about managing your portfolio in 3 sizes: small, medium, and large. Okay. And when things are all washed out, when everybody's despondent like they were earlier this year over the start of the Iran war, maybe you take your portfolio to a large position. When everybody gets euphoric, you may want to take your portfolio from that large position to a medium-sized position. In my parlance, I call it 3-6-9.
Basically, his point was, I bought the dip when everyone hated to buy the dip, and now I'm selling the rip when everyone wants to buy the rip. And that's how professional money management works. So it makes sense. But the point is, I think part of the reason you're seeing some weakness in some of the semi names, not really that much weakness in all the semi names, but some of the relative underperformance today is because they've outperformed so much that, you got some people taking profits, which is not the craziest thing in the world. Robin at 11% going into the print. This is quite impressive given Bitcoin has still been pretty crappy today. So, as much as I want to believe Robinhood is diverged from crypto, at the end of the day, lower crypto trading means lower crypto volumes, which means lower transaction revenues. And that's why it's been pegged to it. It's had some days where it's diverted away and then it ends up coming back. So let's see over the next couple of days kind of how this plays out. But it's nice to see an 11% move right there. The street getting back to being potentially a bit more excited for Robinhood. Pound right there, 143.20. That's up 8%. SoFi up 5% of the day. IGV up 2.7%. And then Oracle up 6.48%. We've got earnings coming up. Let me know which of these stocks that people own. We've got Path. We've got MongoDB. Let's actually make the watch list for this right now. Kind of think Dell's going to pump today. But it's also pumped a lot. So we got Path, MongoDB already kind of pumped today based on the what do you call it? The earnings from Snowflake. Then you've got Dell, you've got SentinelOne, which is another cybersecurity name. That stock is also up a little bit on the day. Mongo's already up 10%, Pat's up 4%, Dell's up 4.7%. You've got Costco. That's going to be important. We got Ambarella. What else do we have? We have Okta. We haven't talked about this in a while. Another SaaS name. That's up 5.2%. Asana. That's another one that we've got. Zeta also had a great day. Looks like we might get the close above 20. We have Gap, American Eagle. And then we have Autodesk. So a decent amount of companies. Chris will be on for macro Thursday after we get through earnings. And this is what we got. I see more Dells than not in the chat. I see a bunch of Paths in the chat. I think Path and Mongo and Okta, if they crush earnings, maybe they end up flipping green like a snowflake. And then Dell, if that continues with the semiconductor trade, that might be what gets it to go green going into the print. All right, here we go. Thursday, May 28th, 4 p.m. Maybe, just maybe, SaaS and FinTech is back. The stock market is now closed. All right. We are done for the day. We are getting into earnings in just a couple of seconds. S&P closed at an all-time high, 754. Unbelievable. Palantir right there, 143.34. That closed above 140 for the first time in a couple of weeks. Robinhood, did we get the 84 close? We got an 84.84 close. Absolutely incredible. Not too bad. Meta, 635. You had Microsoft, that was at 426.99. SoFi closed just under 17. Rocklab at 148. Not too bad at all for this day. The Qs, I think we had 720, 735 on the Qs. That was up 1% on the day as well. Reddit also monster day, 167, up 9%. This thing was 142 on Sunday. Shopify was 103 on Sunday, closed at 115, up 7.9%. You just had a lot of these names come back and give you some more momentum after 3 months of them not really moving. Nebius right there up 8.26%. You had Figma right there as well, up 9.3%, 23.46 on the day. The major stocks that were traded in the options market today, Nvidia, Tesla, Microsoft, wow, number 4 in the entire stock market. Ondas, and then number 5 was Palantir. Then you had Micron. I don't think Ondas has ever made the top 5. Tesla, Nvidia, Microsoft, Ondas, Palantir, Micron, Hood, BSX, MicroStrategy, SMCI, Meta, Apple, AMD, Ford, SoFi, Nokia still up there, Amazon, Intel, Snowflake, and Oracle. Those were your names that ended up getting the most amount of option volume today in the stock market. Okay, earnings. What do we got? Is Path pumping? Let's see. Is Path giving us a pump? Path is up 3.4. Mongo's up 3. Okta's down 1. We also have NetApp. Let me put that in the watch list. NetApp is up 15. NetApp, $28 billion company. Autodesk is acquiring MaintainX, advancing unified platform and operations. Autodesk is flat to down 1.2%. Mongo and Path, I don't have their numbers yet, but they're getting a little bit of move. NetApp really making move. NetApp earnings, they beat by 7%, 243 versus 227. That's a beat, 1.94 billion versus 1.87 on EPS. That's a beat by 4%, beat by 7% on EPS. EPS up 26% year-over-year. Revenues up 12% year-over-year. The stock is up 15% after hours. Costco is also after the bell, but I think Costco's at around 4:30. So it might take a little bit of time to get Costco. Okta, they beat by 7% on EPS. Stock's flat. They beat by 1% on revenue, 765 versus 771, 91 cents versus 85 cents on EPS. So you got an Okta double beat and you got a NetApp double beat. A lot of SaaS companies today. Okta down 2. Hopefully they can hold on to their momentum. Dell's the biggest one that we have today, given how much of a pump it's already had. And then obviously, remember last quarter, they beat by $17 billion on revenue. Like, that doesn't make any sense. 17 billion means the street completely misunderstood how strong the server growth business was for Dell. Even if their margins aren't amazing, that type of growth can be forgiven. So you got Dell right there, I think up almost 40% since the last print, up 4% on the day, up 1% after hours. And then we're going to see what numbers they have. Autodesk, they beat by 5% on EPS, beat by 2% on revenue, 299 versus 284, beat by 5%. EPS is up 31% year-over-year. Revenues up 18% year-over-year, 1.93 billion versus 1.89 billion on revenue for Mr. Autodesk. Okay, Mongo and Path are getting a move. I don't see the Path numbers yet. Autodesk with a double beat and an acquisition. That stock's up 3. NetApp with a very strong double beat. That's up 10. But we still have to see what we've got for Path. Path is up 4. I do not see the numbers yet for Path. The short float on Path is aggressive. That is correct. It's like, what, 30% or something? It's probably more than that. I think it might be just under that. But that is a decent amount. Path is 31%. Wow. 31% short. Yeah, that's a lot. Swift, thank you for the 5 gifted memberships. Appreciate that. Charles, Athena, Adriel, Swatsri, and Foos H Up. You just got a gifted membership courtesy of Mr. Swift Lee. Thank you, sir, for the gifted memberships. Centennial down 1.6. Costco's up a little bit. Wow, a lot of these stocks just went red. Oh my goodness, Mongo. Oh my gosh. It's like they all went red at the same time. American Eagle down 6, Okta down 1, Ambarella down 6, Mongo down 7. Dell is up 6. Dell is up 6. Oh boy. Trump did say to buy it. Let's see if it can hold 4%. Let's see if it can hold. Dell right there, 4.5. Mongo got hit. Mongo got hit bad, 13. Dell, oh my goodness. Dell has beaten EPS by 68%. $4.86 versus $2.90 expected. That is a relatively large beat. EPS is up 214% year over year. Revenue, the street wanted $35 billion. They came in at $43 billion. That's a beat by $8 billion. 24%. Revenue is up 88%. They are growing. They just grew faster than NVIDIA. Stock might end up going red right here because they pumped a lot. Like a lot. It was at freaking 200 a month ago. It's at 320 right now. So in any other world in which it didn't run that crazy, I think this thing would be pumping like mad. It's just, it also, pumped a lot going into the print. Dell right there, up 2%. We'll try to get some more numbers on Dell, but that is unbelievable. That is absolutely unbelievable. I mean, those types of beats, you don't get that from a hardware company. I mean, only NVIDIA is putting up those types of numbers. My goodness, Dell struggling to stay green in the after hours. It pumped to 350 for a second and then came down. Mongo, what the hell happened? So Mongo, 132 versus 118. That's a beat by 12% on EPS. That's a beat. Revenue, 687 versus 663. That's a beat by 4%. EPS up 32% year over year. Revenue's up 25% year over year. That's a double beat. Maybe the guide they messed up on, or maybe they didn't give Amazon $6 billion to buy their chips because apparently that's how software stocks can get a bump on earnings. But 17% is a little aggressive. A little aggressive right there. We'll try to get some more numbers. Dell now starting to get a move. Dell now starting to get a little bit of a move. American Eagle just fell 14. Okay, Sydney Sweeney is not doing her job right here. Revenue, $1.2 billion. That's up 10%. Comparable sales up 8%. Record Q1 revenue. They just surpassed $2 billion in TTM sales. They bought back 3 million shares for $53 million in Q1. Guidance continues to be strong. This quarter reflected the strength of our portfolio and the power of our business. I don't know why the stock's getting hit, but it is indeed getting hit. Mongo 14. Now, Mongo did pump 10% today and 10% yesterday. So technically down 14. It's still net up 6 from yesterday. So, I mean, maybe it's not that big of a deal. Maybe it just pumped way too hard. But I don't see an issue with the numbers itself. Dell right there up 4. Dell up 4. Why is Datadog down? Probably because MongoDB is down. But Datadog's, it's down 1%. It's not down that much. It was up 1% today. Also, remember, it had a massive run after their earnings. Ambarella, don't have those numbers yet either. That's down 5. Dollar Tree was in the morning. That had earnings. Asana, they beat by 25%, 10 cents versus 8 cents expected. That stock up 15, folks. Smaller company, 1.5 billion, but still in the SaaS space. Revenue, they beat by 1%, 205 versus 203. Revenue's up 10% year over year. EPS is up 100% year over year. We don't have Costco yet. Path, I still don't have the numbers on Path. I know it's moving after hours, but I still do not have the numbers on Path. Let me pull up some of this Dell coverage, and then we should get to Path in a second right here. But here are the numbers for Dell.
Now up about 2% in after hours trading. Earnings of $4.86, soaring ahead of estimates of $2.94. Revenues of $43.84 billion, well ahead of estimates of $35.4 billion. The company showing extraordinary growth in its AI-optimized servers revenue, generating $16 billion in revenue for that division this quarter. That's up 757% year over year. The company also raising its full year revenue target for AI optimized server revenue by $10 billion to now $60 billion.
Oh my goodness. They raised revenue by 10 billion. I mean, just goodness gracious, dude. And obviously it makes sense given NVIDIA's accelerating growth to triple digits. So they're going to need a lot more servers, and Dell's going to help with that. But my goodness, yeah, kind of makes sense how the stock has moved as much as it's moved over the past month.
As COO Jeff Clark noted in the release, the AI opportunity shows no signs of slowing. And Dell is bullish that this AI-driven growth will continue, well ahead of expectations, guiding to second quarter revenue between 44 and 45 billion, well ahead of the consensus estimate of 40 billion. Dell is also giving very strong Q2 EPS guidance and is raising its profit outlook for the year, now guiding to full year EPS of $17.90. The consensus, $13.09. Melissa?
Goodness, they're beating the full year guide on EPS by $4, dude. Oh my goodness, what a freaking quarter by Dell. Unbelievable numbers. But this is what we're seeing with earnings growth. This is why the markets are continuing to hit these all-time highs. Path, they missed by 6% on EPS. 15 cents versus 16 cents expected. Revenue 418 versus 397. Revenue's up 17% year over year. They beat by 5%. EPS is up 36% year over year. Stocks relatively flat to potentially red. It's struggling to not go red after hours. Yeah, it's going red. There you go. Missed by 6% on EPS, beat by 5% on revenue. This is another software company. Robotic processing automation. Kind of been stuck in this $10 to $12 range for a while now. And we'll look at the guide, but they missed on EPS and they beat on revenue. Is Dell still moving up? Dell is still moving up 8%, 341. It hit 348 on the initial print. Let's see if that can get right back there. But that is what you have on Dell right there. Just unbelievable, dude. Unfreaking believable. Sentinel-1, they beat by 100% on EPS. This is a cybersecurity company. Down 13. They're getting the Zscaler treatment. 4 cents versus 2 cents expected. They did miss on revenue by $1 million. 276 versus 277. Revenue's up 21% year over year. EPS is up 100% year over year. Stock's down 13. Market cap's at $6 billion. But that stock's down. American Eagle's getting hit. Autodesk down about 2%. Dell up 9. There you go. Now it's breaking out. There she goes. There she goes as Dell continues to make a move right here. 352 is what you're seeing on Dell. Wow, 353. Trump said to buy it. He said, go out and buy a Dell. And, there you go. 358, 12.2%. Mongo just came back from the dead. 255 to 330. Wow. What a freaking rebound on this one. This was down 20%. And now it's about to flip green right there. Look at that drop. 340 to 255. Back to 322. Back to 322. Pretty freaking incredible. See if we can get some coverage on Mongo. Also, the guidance on Mongo I don't have yet, but I would imagine that might be better than expected, which is why we're getting this rebound. It kind of didn't make sense for it to fall on the double beat the way it did. And so maybe that's the street kind of buying back what they ended up selling. Dell still going. Dell still going right there. 356. Oh my, she's off. She's off to the races. She's gone. She is gone. She is moving. 356 up 12% on the day. It was up 4% yesterday as well. Dell year to date, if we add the 12%, 162 year to date on Mr. Dell. Mongo flips green. Mongo flips green. On a day where the S&P 500 hits all-time highs, if you deliver on earnings, you theoretically should get a stock price reaction that's pretty strong. Again, for those that are just joining, Dell beat revenue by $8 billion. They beat EPS by 80%. And then they beat the fiscal year guide by $4 of EPS and added $10 billion in revenue to the fiscal year guide. I mean, these are numbers that people can point out the valuation, but it's hard to ignore those numbers. Dell right there up 13%, Mongo up 5%, Mongo full on reversal right now. And UiPath is up 2%. UiPath was almost down 3%, so that one also reversing as well. Okay, not bad. How do they sandbag so much? I don't think it's them sandbagging, to be honest. I think this is the street. Just like Intel and AMD and ARM's numbers, I think the street didn't expect it to be this aggressive. And you would think the street, just like, the memory trade, right? The street just has not expected this much freaking demand for all the hardware that we need to make these data centers come to life, which are server racks, memory, photonics, obviously the GPUs, now the CPUs with inference. I mean, we need a lot more of it. And if we need a lot more of it, these companies are going to put up way better numbers. And I think even the sell side still can't comprehend how much more of it that we need. But that's also why this bull market makes sense. Like if Dell didn't put up these numbers, the S&P 500 at all-time highs wouldn't make a lot of sense, right? Because it's like, well, why should people pay up for this market? And Dell's giving you the reason to pay up because these are the types of earnings that you're getting. Dell right there, 15% now after hours. Mongo 9%. Mongo just did a almost 27% flip from the bottom right there. Now up 11. There you go. That's a 30% flip from the bottom on Mongo. Costco, it's out. EPS missed by 1%, 493 versus 497 on Costco. EPS is up 15% year over year. Revenues up 12% year over year. Revenues a beat by 1%, 70.5 billion versus 69.6 billion for Costco. So you got a double beat on Costco. SMCI is probably moving with Dell. SMCI is moving with Dell. I mean, if Dell put up these numbers, SMCI is probably going to put up some really good numbers as well. They're in the same space. SMCI has their own issues, but if there's this much demand, wow, 20% on Dell. You would imagine SMCI gets that momentum as well. Gap, they just put out their numbers, 90 cents versus 38 cents on EPS. They beat by 137%. EPS is up 76% year over year. Revenue, they missed by 1%, 3.49 versus 3.52. Revenue's up 1% year over year. I'm surprised the stock's down 6. I mean, that's a pretty big beat, 137% EPS beat, which shows people are shopping for clothes. Shows the consumer might not be struggling as badly. But Gap right there, down 6%. The entire story right now after hours is indeed Dell, 17%, 370 is what we're seeing right here after hours. Here is what we had for American Eagle.
Driver across the business, sales were up 10%, but like we've seen for the past several quarters, Mike, that was driven by Aerie, American Eagle's intimates brand. During the quarter, comps at Aerie soared 25%.
Gabby, thanks. Gabrielle Fonrouge.
American Eagle again, that one down, and you've got American Eagle down and you've got Gap down. The semis are going up. HP should be pumping because of Dell, right? HP is pumping because of Dell as well. HPE, SMCI, and Dell. Did Path miss? Path missed on EPS, but they beat on revenue. Dude, these Dell numbers are just unfathomable right here. Let me pull up the actual website from Dell, see if we get some more numbers. TSSI is one of their main suppliers in Texas, so this one should be pumping right now. It's a very small cap, so be careful with this. 380 million. This one's been dead all year. And as Dell obviously put up these monster numbers, it makes sense for this one to now start getting some love. Well, it hasn't been dead all year. It was dead earlier in February. It's made a pretty big rebound since April. And so, which makes sense because Dell's made a big rebound as well. But all the subsidiaries that are associated with server racks, makes sense that they're getting the bid. Okay, Dell, let's go to the website, see what we've got right here. Our record Q1 performance reflects strong in demand as well as our pace of innovation across the full stack of PCs, compute, and storage. We booked $24.4 billion in AI orders and recognized $16.1 billion of AI server revenue. We're increasing our AI server revenue expectations for fiscal year 2027 to $60 billion. That's up $10 billion, which only goes to show the AI opportunity shows no signs of slowing. Execution was exceptionally strong across the business, from supply chains to sales to pricing, driving record revenue of $43.8 billion, cash flow of $4.1 billion, and continued strong shareholder returns of $2.1 billion. We earned fiscal year 2027. We entered it with clear momentum, raising our full year revenue outlook to $167 billion, up 50% year over year. They also bought back a ton of stock. Again, margins aren't amazing, but that might not matter as much in the moment. Gross margins at 57. That's down a little bit. Operating margins probably a little bit less. Operating income was $3.1 billion. That was also up 2.6% year over year. Operating income was also up 214%, $1.1 billion to $3.6 billion. So even if their margins aren't amazing, the volume of growth that they're putting up is leading to that operating income to still double, which kind of can justify why you're paying the premium right there. Dell 365 up 15% after hours. Wow. Absolutely freaking incredible. Bloom is down 2. I don't see a headline on Bloom, but that is down. I think it was part of some of the semi names that kind of just got hit throughout the day. Micron up a little bit after hours. SMCI again up because of Dell. MongoDB up 13 after going down 20. Robin is down a little bit after hours. Palantir's flat. S&P 500 up a little bit as well. And that's what you got. Gap's down 10. I don't know why the street hates that, but that's down. Okta, that's also down 1. Here's some coverage on Okta.
Potential item. As soon as we clear that up, we'll let you know. Right now, the shares are down by about 0.5%. Coming up, Okta
Airy, American
revenue, margins, and cash flow also topping expectations. As far as guidance, we're not comparing the numbers to estimates quite yet because of potential item. As soon as we clear that up, we'll let you know. Right now,
Okta beating on the top of the bottom, but outside of that, not really getting a massive move. And again, American Eagle, it looks like a good earnings. I don't know why it's down 11, but it was decent. Costco also pretty good earnings. Costco, strong comp growth across major geographies. E-com momentum is strong. Cash balance $19 billion, 931 warehouses globally. Digital sales up 21%. Membership fee revenue $1.37 billion. I think a lot of people in the country pay for that Costco membership. That's up 10% year over year. Net sales $69 billion, 11% up year over year. Costco. A lot of people say, why does Costco get a multiple ahead of NVIDIA? It's because people believe their cash flows are incredibly predictable. And even at this size, they're able to continue the growth. Dell right there, still up 14% on the day. Wow, this is pretty incredible. This is pretty, dude, these numbers are just incredible. Ticker symbol S right there, down 18% in cybersecurity. I don't know if that one's justified, but that looks like that one's scary because you had this one getting hit. You have what's the other one that got hit yesterday? Zscaler getting hit. And now you got CrowdStrike and Palo Alto with earnings next week. Hopefully they don't get hit. They've run harder than all the other cybersecurity names. And so they're going to have to put up some decent earnings here. Wow. What do we think of Dell, folks? What do we think? That's a big one. Even if you don't own it, that's a big one to justify this AI trade. Jay Bullish, thank you for the super chat. Appreciate you, brother. Thanks for what you do and always keeping it real. Thank you for the super chat. Deeply, deeply appreciate it. Thank you for being here, and thank you for keeping up with the show. Chris will be here in about 5 minutes, and then we'll get his take on everything going on in the broader macro. But my goodness, just a massive, massive move. Ambarella, did we get their earnings? That's down 4. I don't have their numbers, but that is down. As that one's getting it. I'll try to get their numbers in a second. Another company that had earnings was Elastic, which I believe is a data storage / search company, if I'm not wrong. Definitely a SaaS. They beat by 9% on EPS. EPS up 30% year over year, 61 cents versus 56 cents. Revenue $450 versus $446. They beat by 1% on that. That stock's still down. And then Path up about 3.28. Oracle, yeah, had a massive move today as well, which was really good. NetApp also crushed it on the top and the bottom. Where is fear and greed? Because today definitely felt like a greedy day, even with some of the beaten up sectors coming back. We are at 60, folks. We were at 61 yesterday, and we hit new all-time highs today on the S&P. Like, I feel like because the earnings growth continues to go up so much, the index on greed isn't as greedy. Because there's a reason that people are buying, and maybe it's not greed, but beating by $8 billion on revenue when it comes to earnings. This is wild, bro. Dell now trades at basically 45 times sales, which is a little aggressive for a hardware company. But at the end of the day, you're not seeing this type of growth out of any of the hardware companies outside of NVIDIA and AMD. Trump just did a new interview with Fox, and he's talking about the war. We just have a clip from it. We don't have the whole thing yet, but here's what we have so far. The entire thing will be out, looks like on Saturday.
Is there a line that they would cross for you to go on the offensive again militarily?
Well, a deal that wasn't going to be good for us is the line ultimately, because, I'm playing it out and we're going to see. And that's what I do. I negotiate. They negotiate. They're very good negotiators. They're crafty. But in the end, we have all the cards because we've defeated them militarily.
White House.
Is there a
Okay, I guess we'll get more information this week when we get that interview. Here was MongoDB's numbers.
And the stock's been a wild ride in after-hours trading. Software company reporting EPS of $1.32 a share, beating estimates of $1.18. Revenue coming in at $688 million versus expectations of $668, thanks to strong subscription sales. MongoDB also issuing better than expected second quarter guidance on both the top and the bottom lines. The stock began lower in reaction, now up more than 12% at the moment. Coming up, we'll look at some of the retail names making big.
Okay, there you go. There you go. That's what you got from Mongo. Dell is the story today. Dell is the story, 367. Feels like this is not the same Dell from 1990. I agree with you. I don't disagree. I do not disagree. Again, I think they had the Trump blessing. They just got a $9.7 billion contract yesterday. Jensen obviously has been a big partner of them. I mean, the signs of having all the support that's needed, along with the actual earnings growth to keep going up, was there. It's just a question of, again, do you have the stomach to buy it into strength? And every other month, essentially, it's been up another 10, 15%. And you've had to be able to buy into strength in order to capture the gains. But for those that bought before earnings today, there you go, 16% move for if you bought, on May 8th when Trump shouted it out at 250, which already was up a lot, but nonetheless, the earnings growth is there. That's it. The earnings growth is there. MongoDB, is that getting a higher? Wow, almost, dude. I blinked and this is up 20%. This is how you know software might be back, folks. I mean, Snowflake up 40, Mongo up 20, Anthropic puts out a new model. The market doesn't even flinch. Figma, Palantir, Reddit, Shopify, Zeta, all of them up on the day, and they closed up. It's not like they went up and then they came back down. They actually ended 7 to 8% up green on the day. Mongo 23% after hours. I mean, these do not look like companies that necessarily are going to be destroyed. Mongo year to date is, before the print, Mongo was down 18%, and that's after the 10% pump they had yesterday, which means now that they're up 25%, they will be up a whopping 5.4% year to date, which goes to show how aggressive the multiples were. Mongo was 450 back in January of 2026. And how much those multiples had to be re-rated in order for this SaaS apocalypse to even, hurt. But it looks like it ended up being a decent buying opportunity. CEO says we delivered better than expected first quarter results as our go-to-market teams continue to execute well and capitalize on strong end market demand on the MongoDB platform across enterprise use cases and emerging AI opportunities. At the same time, we continue to show strong profitability, demonstrating we can drive durable revenue growth while simultaneously expanding margin. Based on the momentum we are seeing, we are raising our fiscal year guidance. So what did they raise it to? RPO is $1.4 billion. That's up 88% year over year. The fiscal year guide, they raised it to $2.96 billion. I think that's about 4% they're raising it by, which is not bad. I mean, it's better than keeping it the same. And it's better than not raising it. So you're seeing the street kind of reward that, as that one's getting a move. 23%, 402 now after hours. I'm trying not to freak out with euphoria right now. Well, the software names are not euphoric. I mean, Reddit at 165 is not euphoric. Shopify 115 when that stock was at 160 2 months ago, that's not euphoric. Mongo was at 440 in January. Now it's at 403. So yeah, it's come up a lot, but is it that euphoric if it's getting back to where it was back in January? So I kind of feel like it's controlled euphoria, even if it is somewhat euphoric, because these companies are just getting back to where they were. And, they probably never should have been as destroyed as they ended up getting. Nebius right there, up a little bit after hours. Iran also up 1% after hours. If you got Dell, though, you're happy today. If you have Dell, you are happy. 371. Last time AMD pumped like this after hours, the next day it went up another 30, 40 bucks. I wonder if the street's just going to take it to 400 tomorrow. Again, you got to have the stomach to buy it into this type of strength. But they did what they had to do. Now it's up to the street to see how much higher they want to take it. ARM, by the way, also had a great day. 340, ended at 335. But this idea of agentic CPU demand doesn't look like it's slowing down. And, obviously that's getting more people to be excited. Oh, sorry. Yeah, you guys are right. I meant 45 times earnings on Dell. It trades at like 2 times sales. I meant to say earnings. So I don't know. Let's see. What is Dell's historical price to earnings? So right now it trades at 45 times. Historically it trades between 16 and 22 times. So it's about double its historical average, but they're also putting up way more growth than they have historically, right? And so you're paying for higher growth. And I guess that could at least be an argument to somewhat justify it if you own it and want to keep holding it. Oracle continuing to move after hours right there. 207. We looked at Costco. They had good numbers, nothing too crazy. 998. Stock's not really moving as it doesn't tend to move on earnings. Path, again, they missed on EPS. Path is red again. Went from down 5 to up 2. And now down red again. So street not really moving too much on Costco. Okay, other headlines we had throughout the day. So first of all, you had Anthropic raise at a new valuation. So that valuation on Anthropic was $965 billion, which is pretty massive valuation. Their run rate they announced is now $47 billion. They raised $65 billion, and valuation is $965 billion post money. So in the midst of all the Anthropic hype over the past couple of months, which created the SaaS apocalypse, the day they announced a new model and they announced a massive fundraise for a company like MongoDB to be up 23% after hours, which was, interpreted as a company that would be dead because Anthropic would completely commoditize them. It goes to show, I think the street is moving on from that narrative, and hopefully we get some fall through going into the next few weeks, and maybe that continues to be the case. All right, folks, let's get someone onto the show to help us make sense of what we're seeing in the macro, SaaS, and how to navigate the moving parts of these markets. Ladies and gentlemen, Mr. Christopher Patel.
What's up, brother? Today was a good day. It was a really good day.
It was a good day.
You know why it was a good day? Most of us have exposure.
If YouTube didn't copyright me, I would play the Ice Cube song right now. But they'll copyright.
Which one?
But today was a good day.
Oh, okay. All right.
Today was a good day.
The reason why I think it especially was a good day for us is because number one, of course, because ServiceNow is up, which is nice for me, but even Palantir and everyone else is up. And I think this illusion that came over the market that somehow SaaS was dead, everyone was just going to basically vibe code their way into all these applications. It just made no sense, because if you look historically, majority of the value that gets created in a lot of these technological revolutions, they end up at the application layer, So like when you look at the
internet itself, Facebook, YouTube, Tinder, Instagram, the applications is where you have multi-$100 billion companies, right?
Yeah, I mean, and even the ones that people associate with hardware, like let's say Apple, right? Apple people will say, well, that's a hardware company because they're selling iPhones. I'm like, yeah, but the main selling point isn't the phone itself, it's the actual Apple ecosystem, the application layer that's on there that everyone is locked into. I can tell you 100% Android makes way better phones from a hardware perspective, but everyone is locked into that Apple ecosystem that works flawlessly across different platforms. So I think that's the same thing with a lot of SaaS products, in that there's not a single enterprise, in my opinion, that's like, let's vibe code our own CRM. Let's vibe code our own, ticket management system. It just doesn't make sense to do it economically. And maybe at the fringes there could be something, but I think AI is probably going to be a tailwind for a lot of these SaaS names, because number one, the demand for a lot of their services is going to go through the roof, and the companies that are pivoting to AI and taking advantage of it. And I'm going to eat my shoe right now and just say one of the ones that you got to give 110% credit to is freaking Palantir. Palantir recognized this very early. They integrated the models into their workflows and said, look, we've got this thing called AIP. It's going to knock your socks off. And they were first movers to it, and they really, really lean in, and they were rewarded by it, by massive amounts of growth. And I think a lot of these other software companies, they're sort of leaning into it, but they're leaning into it a little bit out of a later stage because now it's been proven out. So like ServiceNow has gone completely into agentic AI for all of their processes. So, when it comes down to it, I think the value capture is primarily going to sit with the application layer, because in my opinion, we always have these three phases: revolution, evolution, and then last one is cost reduction. And I think that's what's happening right now. The first wave was the initial ChatGPT, which was everyone was like, oh my God, this is going to be revolutionary technology. This is amazing. The second layer was evolution, where you started to see all of these LLMs start coming out, and they all started to do like these crazy things like generate images, videos, analyze large data sets, and they actually became faster, right? Now we're getting to the stage where everyone is adopting these things, and they're saying, listen, I like these answers that these AIs and LLMs are giving me, but I can't afford them. So now one of the telling signs that I noticed today was Anthropic came out with a new model, but you know what they didn't do? They didn't charge more.
Really?
They didn't. They did not charge more. Look it up.
Huh.
Go to Twitter and put in like Deirdre Bosa. She's very she's like a CNBC contributor. She's very underappreciated on there. But she showed it, and she basically outlined it, that Anthropic has realized that if they want to have the commanding lead in AI, it's not just going to be, hey, we have the best model. It's also going to be, we're the most efficient model at producing tokens as well.
This makes sense, dude, because you had the Uber COO and one of the Microsoft executives come out a couple of days ago saying, like, the tokens are costing more than the engineers themselves, which doesn't make sense.
Absolutely.
Right?
I mean, it's gotten so bad that a lot of independent people that I've spoken to, like independent developers, they're like, look, we've been integrating more Chinese LLMs into our workflows to have like certain parts of like the certain parts of our workflow to have like DeepSeek, and other parts to have Opus 4.7. So for like the high level stuff, you don't need, you need like the best LLM possible, right? So that's where you go with Claude 4.7 and now 4.8. But then like if you have something where you just want a large scale analysis of something that's just like, very baseline stuff, you don't need to have like a model that's costing you an arm and a leg. You could just do the cheap thing. So that's where I think Claude is noticing and saying, look, if we want to become the Microsofts, if we want to become the Google of certain, like Google has a monopoly share, if we want to become, because that's the ultimate goal with a lot of these guys, like there is no, hey, we're okay with being the number two. Like OpenAI's goal in life is not to be number two to Anthropic. Anthropic's goal is not to be number two to Gemini. They're all trying to kill each other right now. It's a cutthroat business.
Why is the SaaS rebound today not a dead cat bounce?
Because I think a lot of people woke up to the idea that, look, a lot of the stuff that's happening with LLMs, there are limitations on what you can do. Like right now, if you try to vibe code yourself an application to replace an existing, thing that you have. But you get 10 errors, and then those 10 errors lead to you using more token usage to fix those 10 errors, and then another 10 errors pop up. Even some of the most forward AI companies that we spoke about the other day, remember? They were saying, look, I was spending more time just fixing the problem that the code created. The other challenge you run into with a lot of the LLMs is that they're always trying to please you, right? So I ran a test, and this is just a very baseline test for myself. I gave Claude the most disgusting ingredients on the planet in terms of like food, right? They're edible, but it's disgusting, like Brussels sprouts. I mean, Brussels sprouts are okay if you grill them, but Brussels sprouts and like cod oil and like all this shit. And I said, make me a pizza. And you know what Claude did? Claude made a fucking pizza. If you ask a human, hey, listen, I've got cod liver oil and I've got Brussels sprouts, make me a pizza, the guy will laugh at you in your face and be like, no, that's not how you make a pizza. But so I think the challenge is when a lot of times what happens is people will prompt something and say, do this for me, but there's no actual product value that comes out of it. It's just, hey, they're just creating something to create it. And that's the thing. If you're just burning tokens to do that, then, you know, so I think a lot of times people were saying that, oh, this is going to do, you know, like this is going to get rid of all these software engineers. And what people are seeing is the amount of software engineers that are getting hired is actually going up. Because now you gotta guard this thing. Every time the LLM says something stupid, you gotta be like, no. Go back. Listen, you know, go back. It's like bumper. You ever bumper cars? It's kind of like the road where the LLMs kind of like hit the side. The guardrails are the humans. The guardrails are the ones orchestrating where to go. You know, so I think the notion that we can just get rid of SaaS is completely, like, in my opinion, dead. Companies like Palantir, Snowflake, ServiceNow, even CRM, which is Salesforce, they're going to do well in the agentic world. They're going to have AI layered on top of all the stuff that they have. And if anything, it's probably going to deepen their moat rather than try to destroy it.
So then here's the question. I think you might have seen the Dell numbers. They beat revenue by $8 billion, increased the fiscal year guide by $10 billion. If someone says, hey, Chris, I get your point about software, but Dell just put up the most insane growth that we've seen this cycle outside of NVIDIA, why would I buy ServiceNow when I could buy Dell?
Because I think long-term, the value is going to be in that platform. It's not going to be in the hardware. And we've seen this multiple times over the centuries, right? When the trains first came out, yeah, trains were great. They were a revolution. But if you were a train builder, your margins were rather thin. Yes, when the industry came, everyone was like, I need this train built right now. I need this train built right now. So yeah, you could command a shit ton in margins, but at some point, you're going to run out of, hey, I need more trains. Now, the question is, when do they run out? I have no idea. But when it does, that growth rate is going to flatten. Right now, Dell is benefiting from the AI build out. At what point do the hyperscalers who are running out of free cash flow and tapping the debt markets, they're going to say, listen, I know we spent $700 billion last year, but maybe this year we only spent $800 billion. And people like go to Dell and go to these guys and say, wait a second, last year you did 100% growth. Now you're only doing 50% growth. What the F is going on? And then when the market recognizes it,
with crappy margins too.
With crappy margins.
Wow.
That's the thing. Where do you want to eventually end up? Do you want to end up in the high margin part of the business, or do you want to end up in the low margin part of the business?
Which is why a lot of these semi names are a great trade right now. I don't know if someone wants to be holding Dell for the next 10 years, but right now they're going to have way better growth than ServiceNow, which is why the stock's going up. The question is timing the trade.
Right. I mean, ultimately, whenever there's this revolution, everyone tends to lean into the hardware portion because that's what enables it. So that's what's in your face, right? Without NVIDIA's GPUs, none of this AI revolution is possible. Without Dell building all the servers, none of this is possible. But at some point, possibility becomes reality. And once reality hits, then it's like, okay, where's that value actually going? You know? And once again, it just goes back into who has the distribution of all of this stuff? Apple, do you know why Apple's not building out all this AI stuff, the models and everything else? Because it's like, we got distribution already. Why the hell are we going to try to compete? We have the captive audience in the space already. We're going to burn our cash flow on doing something we don't need to. So they're just like, They're watching these other guys shank themselves, shank their balance sheets, and just sitting there watching and saying, okay, whoever the winner is, we'll integrate their LLM into our thing. I mean, the one thing Apple is probably doing underneath the surface, and it's probably not as visible, they're probably designing silicon that works so that you can actually have AI directly on your phone, where you don't have to actually go into do an API call just to do something simple as open my calendar and set an agenda to meet with Amit for coffee.
Yeah.
You know?
Yeah. So, okay, let's say you're wrong on the CapEx and Google's spending 200 billion this year. Let's say they're going to do 400 billion next year, or 350 billion. And so consequently, Dell's numbers are going to get even better next year. But let's also say you're right on ServiceNow, and the software applications are going to benefit from the orchestration of the large language models. Does that mean we could have a few more years of an everything rally if this, because if the software was participating this year, it would be a full-on party outside of just the semis, right?
Of course. And that's the question that I think the market is always asking itself right now. Are we in 1995 or are we in 1999, right? Where are we in this revolution? Are we at 9 o'clock or are we at 11:55? You know, that's the real question that I think and I'm not claiming that I know the answer. Clearly, I'm not the expert on this. And the way that we're going to be able to tell is the day that one of the hyperscalers starts to talk about cost efficiency and, you know, maybe not putting as much money into future CapEx. I think that's when you can kind of tell, like, hey, listen, it's like who's the biggest party animal, and when is that guy starting to leave? When that guy starts to leave, you're like, okay, the party's over now. So I would say if we tie this back to the .com bubble, the thing that popped the .com bubble was when venture capital stopped funding a lot of these websites, you know, like .coms. When that happened, it just kind of like threw everyone off. And I think a very similar thing is going to happen with regards to the hyperscalers, in that, you know, they're going to go from, we have so much demand that we are going to spend on growth, to, hey, I think at this point, demand is aligned with how much capacity we have, and now we're going to optimize for cost. The minute they say that, it's not going to be fun.
No, I think what you're saying is so real. Like, as much as we are excited about this AI trade, I think all of us agree with your conclusion that the minute they say that it's not going to be fun. But the question is when. And if they don't do it till 2032, this party is going to go on for a long time. If they do it in 2029, you know, the market will price it in a couple years earlier. So you're right. But then again, if we are compute constrained and there's this much demand, then maybe that CapEx doesn't have to slow down tomorrow.
The one thing I would highlight to a lot of people is, don't get caught up in PE as a metric to determine like whether something is expensive or cheap, because PE can really mask a lot of things that may be happening underneath the business that you don't necessarily want to take into account. As an example, and like I said, NVIDIA is doing amazing, but if you look at a lot of the gains on their EPS growth last year, like last quarter, they came from their Anthropic stakes and all the stakes in Intel and everything else going up in value. So that equity appreciation went into that EPS number, right? So you have to be careful with like saying, like, same thing, Micron is cheap because it's only 9 times PE. And I'm like, yeah, 9 times PE, but that means that Micron is going to have the same level of spend for the next 9 years in order to basically justify that.
Which I don't know if even the biggest Micron bulls think that by 2035, the hyperscalers are going to be spending $1 trillion a year.
I mean, the key here is, why is Micron getting this giant margin boost, right? Because I mean, if you look at their margin in the past, they're not good margins. But the thing is, right now, everyone is desperate to spend money on AI, that people are saying, look, I need more memory. I've got inferencing coming. I need more memory. And so Micron is able to say, listen, I'm going to charge you crazy high margin. And at some point, the hyperscalers are going to say, well, either we're going to technologically figure out how not to use as much memory as possible, and basically try to make things more efficient. And like I said, to your
point, for those saying that won't ever happen, Look at what Anthropic did today. They didn't raise prices on the latest model because they knew people would just go to Codex because they don't want to pay as much. Like eventually supply and demand takes place.
I'm telling you, 3 phases: revolution, evolution, and then cost reduction. The day that the hyperscalers go into cost reduction mode, they try to figure out how to do things more efficiently, like DeepSeek, right? DeepSeek figured out, like, hey, if we use sparse, like for models, sparse something, it uses a lot less KV cache, right? You don't think these other guys are going to try to do the same thing? I mean, the key, what's the thing? Necessity is the mother of invention, like all invention, you know? So right now, everyone,
hopefully it's years away, but when that does happen, and you know, I think NVIDIA understands that's inevitably going to happen, which is why they're diversifying the business so much. But when that does happen, yes, the hyperscalers are probably going to have a different interpretation of where that CapEx goes. Speaking of the hyperscalers, Meta. So I'm really curious your thoughts on 2 things Zuck said yesterday. Number 1 is subscriptions. I'm curious if you think that's even kind of interesting for the Meta thesis. And then number 2, Zuck's had a quote to CNBC that they would be open to selling compute and becoming a neocloud. Is that enough to re-rate the stock? And is this kind of desperate from Zuck's, or does this make sense?
I mean, the guy spent a lot of money in developing AI, like their AI, right? So they need to make money back. I mean, look, at the end of the day, Zuck is Meta's largest shareholder. You know, he's not in the business of becoming, you know, going on the street. He's not that big of an idealist when it comes to the business. Like, he knows that at some point, if there's enough pushback, he will, you know, he'll pivot. And I figured that Meta was always going to be in this position where they're going to try to make the best, you know, LLM possible and get to a level where they can monetize it, especially with their distribution, which is clearly what they're doing. But then at some point, maybe they get to a point where they've got an overabundance of compute, and now they actually realize, hey, the real business here is not just, you know, selling the LLM, it's actually selling that excess capacity. I mean, Elon flipped too. Elon said the same thing. Colossus right now is supporting Anthropic. So, like I said, I think this is like the early signs of just people becoming aware that, hey, listen, it's not as useful for us to keep committing so much money on training LLMs. And basically, instead, let's focus on delivering this so we actually get a tangible ROI from this. And also, it's not that Meta is not going to be spending money on AI. They're still going to spend a ton of money training their own stuff. But I think they're really going for, let's make the most efficient LLMs possible, and let's really push open source.
And to your point, this was Gerstner today on why that Anthropic deal was so important for SpaceX.
Valuable place to sit. He just struck a huge deal with Anthropic. I think more deals are to come. And that, from my perspective, totally changed the game on the SpaceX IPO. I knew that the launch business was great. I knew that Starlink was great, but that alone would not justify the valuation. Him building the data centers, which are going to power all of AI, and him then using those to train up his own AI with incredible team that he acquired from Cursor, I think is a total game changer for the IPO and puts them in a really good position.
So it's interesting. Even Gerstner was like, yeah, this valuation made no sense. But now that they're actually having a different revenue stream to the tune of $1 billion a month from Anthropic, you can get behind justifying 1.5 trillion, right?
I think everyone, right before they go public, they are going to do everything possible to pad their growth, pad their numbers as much as possible. In any other circumstance, do I think Elon would have wanted to give a chief rival not excess capacity, but give them any sort of leg up? No. But he knows that he needs to get this IPO, SpaceX IPO done, and he needs to get it done at a staggering valuation so he can use a lot of that money to basically pay down some of the debt that they have also. So, like I said, from a shareholder return standpoint, Elon is going to do everything possible. This other thing with let's do space data centers, I don't even know if that's a reality for the next 5 years, but shit, if you throw that shit into the ether, automatically people are just going to say, I'm not investing in SpaceX for their low margin launch business. I'm investing in them for space data centers, which is going to be the greatest margin on the planet. So it just, he did that. Yeah. Sorry, go ahead.
To your point, So SpaceX is trying to raise $75 billion in the IPO, and Anthropic just raised $65 billion in the private markets today. I mean, that's how crazy this time to be alive is. The largest IPO in terms of capital raised just happened minus $10 billion in the private markets, and it happened in a couple weeks. I mean, it was basically like either you send us your money or you're out of the deal, and they had no problem raising the money. So the liquidity's out there.
I don't know if you ever noticed this, but Elon has this way of, look, even though EV sales are down, all this other stuff is down, bro, we're going, why are you focusing on that? Robots, that's what you should be focusing on. You know? And then when the robots thing kind of like passes over, what are you talking about? Bro, it's not robots. We're focusing on space robots, bro. We're going to conquer Mars with robots. And people are just like, bro, I'm not investing for today. I'm investing for tomorrow. I don't give a shit that this is 1,000 PE company. I'm investing because I want robots and Teslas on Mars, bro.
Well, I think once he ends up merging them, you know, that'll be the ultimate way to kind of justify how you put them both together.
I think that's another thing too. Like Dan Ives, I think should be given a fucking medal by Elon Musk. Putting that out into the ether of just saying, yeah, well, one day Tesla could end up merging with SpaceX. Now fucking Tesla's value is going higher because they're like, oh, this is how I'm going to backdoor my way into SpaceX.
This was Dan a couple of days ago making that point.
I think there's misnomers because to me, SpaceX is going to be about defining space in terms of data centers in space, the business components. Not necessarily we're talking about joy rides in space for 20 seconds, and it's really going to be almost a convergence of tech and this new sort of what I view as like a spatial revolution. It all starts with SpaceX. Well, there's so many names like Planet Labs, Rocket Labs, Voyager, whatever. And this is just the start. But it comes down like from Musk, it's a watershed moment, not just for him, but what I view is kind of for the market. And really, it's starting to now create a whole nother category in terms of what this is going to mean.
So the company started off as just rocket launches and trying to make reusable rockets and cheaper launches. But now it went into satellites. And then there's almost this like big promise of the orbital data centers. And it seems like that's coming right at the time where everyone on Earth is like, hey, we may not have enough space or power or data centers. And so how much of this is evaluating the existing business versus people buying into the future vision of what it could be?
80% of it, future.
Interesting.
If you look at it currently, would you at 2 trillion or $1.5 trillion, would you? No. In other words, it goes back to like, what will this become? But then it comes down to like, if you bought Intel when, US put its stake, it wasn't just on that. It was like, can they become a player in AI?
It's the future potential. That is what you're buying SpaceX for. Dell, by the way, crazy move after hours right here. Almost 400.
And you know what, to be honest, I do think that we're going to get space data centers. It makes a lot of sense. Like in space, you don't necessarily need all this cooling that you have right now. You also have, what is it called? Energy that's up there. You can do via solar, like the solar panels, 24 hours. So it's not implausible. It's actually very practical. But I think the challenge is always timing. With Elon, right? Timing is one of those things that Elon tends to be very aggressive on his timeline, and he very rarely fails to deliver on time. It's usually much further out. But the thing is, investors don't care. They're just like, shit, this is amazing. I'm going to buy it. Like, I remember you talk to anyone in 2018, they're like, bro, by 2021, 2022, every car in the US is going to be a Tesla truck just delivering shit all over the place. And I'm like, yo, I haven't seen a single Tesla truck anywhere. What's going on here? But they're out there. So
I want to get your reaction to this. I haven't watched it yet either, but this was Tom Lee today saying we should be getting a correction soon.
Microns and the snowflakes. And you think what as you watch this market?
Well, I think it was a great conversation with Liz. But one thing to keep in mind is now that Q1 earnings is behind us, people thought S&P earnings would be $70. It's going to come in at $80. So that's a $10 beat. That's $40 annualized. That means that this added, the upside to earnings is somewhere between 800 and 1,000 points of S&P upside. I think the entire rally since April could be explained by just the Q1 earnings beat.
You're calling for a 3-phase market still. Explain to our viewers again what that means.
Yes, our base case for this year which we expected to be a challenging year, and it feels like it, is we'd rally towards 7,300 initially. Now we're above that, but I
Yeah, we're
think
almost 76.
yeah, and I think we can get to maybe 77, as high as 77. But I think then we're going to digest a lot of things until October, and that's a new Fed chair. It's the energy shock that Liz talked about, especially shortages of petroleum products and lubricants. AutoNation talked about it. And the third is the IPOs of SpaceX, OpenAI, and Anthropic, that when the unlocks happen, that's a lot of extra supply. So I think that could pressure stocks in a way that feels like a bear market. But then post midterms, I think we rally strongly, and 2027 is a year where we might see some of the best returns we've ever seen in our lifetime.
All right, Brian.
So question to you, Chris, and then question to the chat. Do you think, because if that happens, it doesn't matter if you own ServiceNow or NVIDIA, I mean, you're going to take a haircut.
Someone in the comment section said something, actually, let me correct myself. I said, you don't need cooling in space. You don't need active cooling in space. You need passive cooling. Passive cooling is much easier to do because all you're really doing is you're thermally radiating the heat away from the chips. So the chip heats up, you can thermally, remove it, because space is basically negative Kelvin, right? So you don't need active cooling right now, which consumes a lot of energy. Like right now, you have a data center, you need it to constantly feed water to cool it, or if it's air cooled, to constantly have fans running. In space, you don't need all of that additional.
How do you know this much about data centers and cooling, bro? Like, why do you like?
You can just look it up, man. Look it up.
Okay. Well, anyway, it's Tomly right. We're gonna get a 20% drawdown here going into the fall.
I mean, if fears materialize, then yeah. Let me see. Yeah, if everything is driven by narratives, right? So what ends up happening is, if the narrative is that, oh my God, growth is slowing down with regards to AI capex, what do you think happens?
I think, but go ahead.
No, I'm just saying.
Well,
That's what. Yeah.
I don't think the capex slows down anytime soon. It seems like he's calling for a 20% drawdown to digest what's happened, but I'm also like, what is there to digest if there's not a catalyst?
There's no such thing as negative Kelvin. I know the chat's blowing me up. I forgot. Okay, it's negative Fahrenheit. 1 Kelvin is what's actually up there. So there's no such thing as negative Kelvin. Negative Kelvin is just baseline, like the coldest you can get.
See, the good thing about me is if I say something stupid, I can just keep yapping until everyone forgets about it. And then, after 5 minutes, he didn't say Cat Williams. He doesn't, and we move on to the next topic. Unfortunately, you got to take it. So
no, I mean, they're right to call it out. I was speaking so fast that I didn't necessarily just,
trust me, I know about speaking fast and saying some shit that makes no sense and being like, you guys didn't catch that. I didn't actually say that. No one heard that.
Bro, it's absolute zero. Yeah.
Whatever. The point is, space data centers eventually will happen. It's just not happening anytime right now. It's the pump SpaceX. But and to the chat as well, do we really think we can get a 20% drawdown, like in the next couple months? 20% is 6,300 on the S&P, bro. Or sorry, 6,300. A little bit below 6,300 from here.
I hate to say this, but I think it's possible, bro.
It's 6,000.
I think it's possible if the narrative flips. I'm telling you, all it is just one hyperscaler coming out and saying, we're going into cost efficiency mode on an earnings call. And let me tell you, the market is...
But realistically, bro, which hyperscaler says that this year? Like with Jensen's guidance, with Dell's, I don't see that happening in 2020. With Micron's freaking 5-year contract, I don't see that happening this year. Maybe 27, maybe. But
someone's going to break the dam, right?
Someone will do it. I hope it's not this year. Okay, so let's get rid of the capex argument. What else would, like, are we going to start another war or something?
I mean, with Trump, you never know, man. Trump, listen, I thought we had this peace thing negotiated about half a dozen times by now. Maybe we invade Cuba. I don't know. Maybe China
Yeah,
invades
but
Taiwan.
I don't know. Well, the China Taiwan thing would be horrible, but the Cuba stuff, I don't even know if the markets would care that much about. Like I'm trying to think. I'm trying to give Tom the benefit of the doubt and be like, what is? Because he's right. Midterm years around the summer to the fall, we take a nasty dump. And I'm just trying to think in this market environment, what would cause that outside of massive euphoria? But you look at a lot of stocks, Meta, Nvidia, they're not euphoric. Yeah, there are some semiconductor stocks that are going crazy, but those will just come back down to reality. It's not going to drop 80%,
Yeah, I mean, some of the comments are actually pretty good in that most of the time when you get these extended sell-offs, it's probably because of a credit event. If we hear like a private equity company that's heavily invested in the AI, build out, whatever, and all of a sudden their default rates are going up and they close up shop. Now all of a sudden you've got this flight out of private equity and a lot of capital getting pulled out. And
well, why would their default rates go up? The people that are borrowing from them are good for the money.
Well, depends. It really depends. I'm saying like from other parts of their private equity book. Like here's an example. Like Blue Owl and all of these guys, they all got cut in half. Why? Because they got hit with a bunch of redemptions because everyone says SaaS is going to zero, right? SaaS is no longer going to zero, but now they've got all of this spend that they've done on what is it called on data centers. So if one of these companies comes out and says, hey, listen, you know what, maybe we don't need as much capacity for the data centers and these guys are building it out, you got a problem.
That's a fair point. Also, I do agree. A correction after this type of rally, although it would suck for a lot of the stocks that haven't moved, it probably would be healthy for the whole market, right?
Inflation too. I mean, what if Kevin Warsh comes out and says, look, inflation's starting to rise again. I'm going to have to raise 50 basis points to combat it. I'm not going to take the chance of, letting inflation become a bigger problem. If you did that, bro, no one is factoring in a rate hike right now. But let's say we do get 2 rate hikes. The market is definitely.
Do you really think Kevin Warsh was put there to hike rates? Like, if we're being honest, bro, like, he's not going to hike those damn rates, bro. We could have inflation at 8%. He's going to chill off. Like, he's not.
I don't know, bro. Like, I don't know. He might have said a lot of things to become the Fed chair, but once you're the Fed chair, you might do something different. You got to remember, this was the same thing that happened with Jerome Powell. Jerome Powell is the one who put Jerome Powell in this chair.
Okay, but Kevin Warsh is very loyal to someone else who's not named Donald Trump.
To who? To Peter Thiel?
To Stanley Druckenmiller.
Stanley
Druckenmiller is long tech. He's not going to appreciate the guy he mentored, the guy that he basically brought a lot of wealth to, raising rates on him. I don't know. I don't think
unless Stanley Druckenmiller is poised positioned to the other side beforehand, then what's your argument? Keep an eye on. I would say just keep an eye on the 13Fs. A lot of these guys, they have independent people researching a lot of stuff. So if you start to see the super investors kind of shy away from a lot of their tech investments, that could be an early sign that they're at least trying to hedge themselves.
I don't think Drux is shorting bonds though. Like, I don't think Drux is shorting bonds. Like he was.
What are you talking about? He was shorting bonds.
When? This year?
Last year. Throughout last year, he was shorting. He was shorting long bonds all throughout last year.
Yeah, but in that interview he gave back in February with Morgan Stanley, I mean, he was pretty much long tech, long international. I think he said, I think rates will come down. I don't think he's short bonds anymore, unless he changed in a month because of these inflation numbers and called up Warsh, and Warsh is going to help. Like, I don't know what the elite of the elite talk about and how it is constructed, but I'm pretty sure Kevin Warsh is not just going to make this type of a decision without thinking about so many other different people that are involved, even though he's independent, which you and me probably believe is bullshit. Right?
Yeah. I would say we just have to be very cautious on this inflation picture to see if it's not going to start going absolutely crazy. Because the oil staying at close to 90 to 100 for a prolonged period of time, I said it's going to be a much harder problem to solve the longer oil stays this high. And as interest rates,
it has come down over the past couple of days, right?
It has. Yeah, but because now there's like the prospect of a deal that's coming through. But the thing is, with the Trump administration, you don't know until the deal is actually signed. And even then, I wonder if there's going to be a rotation into some of the laggards that could benefit from a lower interest rate going forward. And then all of a sudden, we have another kinetic problem happen in Iran. And now all of a sudden the market is the other way. Like 30 days ago, the market was not saying, oh, we're probably going to have a resolution. Everyone was saying, fuck it, we're going to end up having another, well, not 30 days, 60 days ago, when the market was completely selling off. Dude, that was, you remember, I think, what was it, March?
I remember.
March or April?
I remember. It was every day. It was ugly. By the way, hold on. Before we keep going, why the hell is Virgin Galactic up 20% after hours?
I'm telling you, bro, that right now the theme that's in is space. So the narrative is pushing everything space related higher. That's why I was telling Matt last night. I said, Matt, as great as Rocket Lab is, make sure that you're hedging yourself via some puts, because this rally in the space stocks are rallying primarily because of SpaceX.
But this is the trashiest, bottom of the barrel type of space stock you could buy. Like, why is this going up 20%?
It doesn't matter, bro. This is how the market is at times. People play the catch-up trade. Oh, I missed out on Rocket Lab, so I'm going to invest in, Virgin Galactic, and I'm going to invest in Redwire and all this other shit. So it always comes up. A lot of people revenge trade. And this is why we were having that discussion on WhatsApp. I was like, do you notice the new crop of YouTubers that are coming on in the market now? There's like a bunch of them are just like, everyone's become a stock picker again. Yeah, feels very much like 2021, remember?
In 2021, there was a lot of new finance media. I think the most prolific was Trey Trades, who was like the biggest AMC guy. And, if you really rode that wave and didn't have anything real to your brand, those channels disappeared. So I agree, there's a lot more of them popping up. And it's not cool to see, trash like Virgin Galactic go up. Dell, by the way, almost hitting 400. Yeah. But I also wonder, at what point does this stop? And I wonder if that's the SpaceX IPO, or if that thing goes to 3 trillion, then this stuff just continues.
I mean, I don't know, bro. This entire market is being led higher because people are just trying to play the catch-up trade on some of the other smaller names that haven't done as well just yet. So like I said, they're like, shit, I missed out on Rocket Lab. Let me buy this. And I think the same thing is happening in a lot of like chip stuff. A lot of it is happening in like, on one hand, you've got NVIDIA, $4 trillion, and everyone's like, buy AMD, buy AMD. AMD's like climbing higher, and NVIDIA's like just chilling flat. And I'm like, what the hell is going on here? Like, how the hell is AMD a fucking $1 trillion company right now, right? At 150 PE, and people are like, yo, NVIDIA's a fucking shit go. I'm going to buy AMD.
It worked. It worked.
Yeah. Yeah, I mean, because everyone's like, bro, I missed out on NVIDIA. Let me go catch up the trade with AMD, and it works. So then you've got these other people that are like, holy shit, this guy made a lot of money on AMD. I better get in too. And then eventually people fucking buy, even smaller ones. So it is what it is.
Mark says, Amit, you can't create a spaceship and call it trash. Okay, I'm not saying Virgin Galactic spaceship is trash, but come on, guys. What are we talking about? 97.76% all time. Chamath pump and dump, pumping 20% out. Like, what are we talking about? Forget the fundamentals of the company. This is not something that should be pumping unless there's a real change in the business. I don't see any headline. Do you guys see the headline? Did they invest in AI data centers or something? Like,
the other thing though, Amit, is that they're so small now. Like, what's the market cap on this thing? It wouldn't take much to push it over the edge anymore. 450 million. Yeah, I mean, bro, you get enough retail investors in this thing, they'll pump this shit up. It's so small that it could rocket higher. But you know what's going to happen? It's going to go up, and the same thing that happened with Rocket Lab is going to happen again with these guys. They're going to do an at-the-money offering, get a whole bunch of money out, and then they're going to survive like a zombie company for another 5 years.
I mean, dude, Allbirds is still down 99.18%. But it did have that pump to people bought this at $24, and now it's at $4 because they bought some GPUs. This is the type of stuff that's scary, even though, yeah, it happens in a bull market.
Yeah, man. I mean, when some people like chasing these things, and I feel bad because it's like you want to be part of this exponential grower, and you want to be part of that exponential growing industry. But what happens is just stay with the winners. Like, you know who the winners are, just stay with them. You're not late. That's the thing that I always like remind people. Like, if you see a company like Nvidia, like I bought Nvidia 5 times higher than what Tanner paid for it. But that doesn't mean I didn't make money on it, right? I'm not going to go out there and buy some shit go just because I'm like, yeah, well, I think this is the next Nvidia. Like, no, there's one Nvidia. I'll buy Nvidia. Chill. You know?
What do you think about Trump pumping quantum and drone stocks?
I don't know, man. Like, I don't know.
Is it something to tail? Just buy some Kratos, buy some Ondas, buy some D-Wave.
You can't even fault the guy. It's working. Like, the U.S. government is up almost like 100% right now on its equity investments and things. So
Yeah.
I don't know. Like, how much money did the government make on Intel right now?
They put in what? They put in $8 billion, so they're up almost $35 billion right now.
Yeah.
20 or $30 billion right now. Yeah, $30 billion. So they're up $22 billion.
Yeah. It's just someone made a good comment. They're like, Chris is ignoring the fact that you can, it's not just a one person gets all that. Is ignoring the fact that more than one company can win in the same sector. You're absolutely right. Let me take it back. If you want to chase the second, third, and fourth order companies, by all means, go ahead. Just, do your own due diligence. Me, I see Rocket Lab doing well, and then I see Virgin Galactic, whose idea is, let's take a plane and let's strap a rocket to it, and then let's get it halfway up, and then let's get that plane to go even higher, versus Elon, who's like, yeah, we'll just put a fucking rocket up in space, and then we'll land the rocket, we'll just reuse it. Like, I just don't see the business case for Virgin Galactic. I'm sorry. Like, it feels like we're way more efficient at doing regular rockets. Like, why?
Dude, I'm looking at a post right now because I can't find any headlines. The guy says, "Not sure I believe in the long-term success of Virgin Galactic, but technically it looks good, risk to reward. SpaceX narrative acts as a catalyst. I'm buying calls tomorrow at the money." and that might work, to be honest. That might end up printing. But the point is that that's been the market this year in a lot of these different sectors, and it's worked.
Like, the same thing with Cerberus, right? Like Cerberus, Cerebus or Cerebris, right? NVIDIA did amazing. Okay, we have an idea. We're just going to do what NVIDIA does, but we're going to do it on the wafer scale. And now they've got, what, a $50 billion valuation? Dude. And they IPO'd with that. And since then, they're down 22%.
Yeah, people didn't buy this at 300. They bought it at 350. So it's just one of those things to be careful of. But then you got Dell crossing 400 after hours. And this is what I said in the morning. If you're worried about the fact that you're in a stock that's not moving, then the simplest thing to do is dump it and get into a stock that's moving. The problem is the amount of people with the stomach to get into a Dell at 400, which theoretically, I know it's not the same valuation, but AMD was at 400 after earnings and it pumped to 500. So buying into strength worked. Just like Robinhood buying into strength worked last year. If you bought it at 60, 70, 80, 90, ends up going to 150. Eventually there was a correction, but the point is, do you have the stomach to get out of the loser and jump into the winner and embrace the volatility of it? And if that volatility ends up going the opposite direction as soon as you jump in, I think that's what really scares people, which is also why they don't get it.
Sam did a really good interview with this one former hedge fund guy. I recommend everyone go watch it. It's on Sam's Twitter, and he actually has it on YouTube. But basically, he said, look, and he's speaking from experience. He said, look, we can see when bubbles come, but the mistakes that he's made in the past is trying to short, and he's lost 80% of his money because he tried shorting something that he thought was a bubble, and it just went way further than that. So he said, look, invest in things. As long as they're working, stay in them. The minute you find out that it's not working anymore, don't buy it. And you can sell and sell peacefully. And it's the same thing going down. Short the thing, but wait until the market confirms that this is a piece of shit. And then, just because you didn't nail the absolute top or the absolute bottom doesn't mean that you can't make money in this market. So instead of trying to nail the absolute bottom on a stock or an absolute top, just ride the wave higher, ride the wave lower.
Yeah, and again, it's one of those things that's tough here, right? Because Dell went from 150 to 210 to 280 to 320 and now to 400. There were plenty of opportunities to buy this into strength, and maybe this is going to 500. But once again, you had to have so much conviction that it was just going to keep going up. Same thing with Intel, that you could, as you said, ride the wave. And sometimes when everyone thinks they can ride the wave, that's when the wave stops working. But that hasn't happened this year. It continues to go.
Don't fight the tape. I think he said it very clearly. Don't fight the tape. If it's working, let it work. Ignore the fundamentals at that point, because and that's the other thing too. Like, as long as you know what the reason why you're buying it, it'll be okay. By the way, I have a fucking nasty position in ServiceNow.
Oh, I know. Steve told me about it. I know. I know how much money this unbelievable Indian gambler who thinks he's a responsible long-term investor has.
I could not help it, dude.
I think you have a gambling issue, but you have a gambling issue that is responsible, because you're not going to gamble on Palantir or Tesla. You're going to gamble on some safe, conservative shit like Verizon, but you're going to freaking load the boat when you gamble.
Yeah. Oh, yeah. At one point on Verizon, I had 1,000 contracts.
I know.
Like, who has 1,000 contracts on Verizon? I would literally
a gambler. It would be a gambler.
If you look at the float on Verizon's options, the $45 calls, that was pretty much all me. Like, the entire open interest on Verizon $45 calls was me. So
do you want to reveal how many figures you have in ServiceNow? It's up to you. You don't have to. But
it's 7. Everyone should know.
That's what I'm saying. This is a gambler, bro. A responsible gambler, though.
A little responsive. That makes it sound nice. I appreciate that, but no, dude, if you know something and you have real conviction in it, you gotta put your money into it. See, I can't get behind like the Nebiuses and all those other stuff, even though I know that you guys are doing really well on it. I don't have the conviction. If I have conviction in something, I'll hold through the worst of times. Like when United Health was at like 280, I bought it. That shit went down to 230. What did I do? I bought more. Even when I was on the Patreon, it was the same exact thing. Like, people saw like ServiceNow at like 95. I was buying, the thing dipped to 88, and people were looking at me, and I was just like, yeah, I bought more. People are like, what the hell is going on here? If you look at my portfolio, but I get the benefit of this thing recovering now because I have the conviction in ServiceNow going up. I have a core.
Also, I think when you load up very heavily on a position, especially when you do it with options, you've got to be right on the direction.
Yeah.
And the easiest way to get smoked on directions of a stock when you have an expiry date is if you're buying something at all-time highs. But ServiceNow's down 50%. So the idea that it mean reverts after a couple of years is not that crazy to me. So that's what I'm saying. It's at the end of the day, everything's a gamble, but it's a more responsible gamble.
And especially if you like with options, it always comes down to that, where you have time limitations. So unlike stock, where you can just buy, hold, and never think about it, you have to be right on timing as well. Now, the good thing is a lot of mean reversion, you can make really, really good money. Remember when we spoke about Truist in the middle of all of that shit with regional bank crisis? I was like, is this a fundamentally broken business, or is this just a narrative pulling the valuation down? And anytime you have that second, the latter, that is an opportunity where you can make money. Like the narrative that SaaS was going to disappear overnight, and it makes sense to sell off a company that's growing still 20, 30% and drown it with a 50% discount. And I'm looking at this and I'm just like, no, like this doesn't make sense. So I leaned into it. I told my wife, I said, babe, if you don't want to work anymore, it's cool. But that's the thing. Like, I think one of the great things about the community that we have is that each one of us has our own investing styles. And the thing is, we bring a lot of that value and we diversify that value into it. Like, you got to give credit to Matt for swinging at the fences on small and mid-cap companies, because he's like, look, I don't care about the fundamentals. I like a theme, I'm going to pick it. And that's why he's getting rewarded with his portfolio. Right? For me, if you look at most of the companies that I have, they're all mean reversion plays. Some of them worked out really well. Some of them didn't. Like Novo Nordisk is a mean reversion play for me, right? It didn't work out so well. But on the other hand, UNH did, right? So I think that's the key. I mean, what does your portfolio look like? You're at 66%.
The only way I come back is if Palantir and Hood in the last week come through for me. Duolingo's not going to come back. And then maybe Nebius and AMD go even crazier, but I don't know if I can catch up to Matt with Rocket.
I don't know, man. Maybe Duolingo has some play on it as well. You know, I mean, bro, if you're down 77%, but you're still growing your business and you're generating cash flow, I hate to tell you this, but the companies can just buy back their own shares at a stupid discount and basically boost up the stock price artificially.
Would you buy Duolingo here? Would you seriously think of it?
I don't know. I haven't done research on it to say that.
I think they're actually losing users on the monthly actives, and bookings was down. That's the. I mean, like if they didn't have those issues, it might be a turnaround story. But because of those growth problems, as soon as you stop growing in certain metrics, I think that's when the street gets upset.
If I had to guess who's going to outperform, like let's say we just kept the portfolio. By the way, can you open the portfolio up again, like the thing? Yeah. I ran this through what is that thing called, Claude, and I said among the portfolios here.
Let me do it right now. Let's do it live. Let me take a screenshot.
Who's gonna outperform? You know who's gonna outperform?
Hold on, don't say it.
Okay.
Among the portfolios listed below, who will outperform in what, in a year?
In 1 year.
Okay. I'm gonna say just give me a name.
Who do you think it is?
I don't know, dude.
I'll tell you exactly who it is.
Put in the chat. Who do you think Claude's going to say? Don't tell us what Claude said for you. Tell us what you thought Claude would say.
I agreed with Claude. I agree 100%.
So
I agreed with Claude. Yeah. So I won't say it. Yeah.
Okay, let's see what everyone says. I'm not going to look at the answer yet. I'm seeing a lot of Steves and a lot of Matts. I'm seeing a lot of Steves and a lot of Matts. Okay. Steve.
Yep. 100%. Steve is the one that I got too. The reason why Steve is going to outperform all of us is because a lot of the companies that we have already run. Steve, look at his portfolio right now. They're all going to benefit from the mean reversion.
Oh, that's a good point. They're all down. Yeah.
Right? So any recovery in crypto, his MSTR goes from -60 to 0, maintains the 670% on Micron, and now all of a sudden, look at his portfolio. It'll end up going to 100.
Yeah, Claude's saying the same thing. It's saying a lot of Steve's shit is down. But it's also saying Micron's going to keep carrying it. So
No, Micron is going to keep his return at 50%, right? But the rest of them are going to catch up from their -50% to let's say -25 or even -10%. And now all of a sudden you get that giant boost of that Micron position holding you steady while the rest of it is going to push your portfolio return up.
I just asked ChatGPT. Let's see what we get. Tanner.
Ooh. Why? Are you running the stupid version of ChatGPT?
No, this is the thinking version. Tanner's portfolio is the cleanest mix of high quality growth and AI semiconductor. The big reason I picked Tanner over Matt or Amit is that his portfolio is only up 15%.
What the fuck, bro? Where's Chris? Didn't even mention me.
Let's
Fuck
ask
you,
Gemini.
ChatGPT.
Let's see if Gemini.
That's so fucked up. It didn't even pick me at all. It ignored me completely. Stupid fucking open AI.
Okay, let's see what Gemini says. Let's see. You pick
I
Google.
swear.
Let's see if it gets you. Why is it searching the web for this? It doesn't need to search the web.
No, it's good that it's searching the web. It's good. Ooh, Matt. The portfolio that has the current total return. No, you got to ask it who will outperform in 1 year.
Dude, Gemini's stupid. I don't know how they have 900 million people.
Okay, say from today. Maybe that'll change the thing.
Dude, Dell's at 420.
Yeah.
I mean, congrats if you're in Dell. It was a monster number. We talked about it if you scroll back in the beginning of the clip, in the beginning of the show.
So all the LLMs are picking different people from today. See, Steve, that's the thing. You have to ask it. This is the challenge with with AI. If you ask it something, You have to be so specific, otherwise you'll get the wrong answer. You know, ask go back to back to OpenAI and ask the same question from today and see if it gives you a different response.
Tanner says because it says Tanner and me and Chris say Gemini must be broken. Oh wow, ChatGPT says Tanner too.
What is going on here?
Let me ask
Grok. Chris, ask what about Chris? The hell? All of these, you know what? This is why I'm negative on fucking AI, bro. Fuck AI.
Grok says Matt. Let me ask
Not
Gemini.
one for Chris. Not one for Chris. These bastards.
Not one for me either. You and me both. What about?
That's true. That's true. But at least they referenced you. I didn't even get a reference. Like, oh, that side guy over there. The ultimate market correction.
Market experiences a severe pullback. Okay, so you win in a bear market almost.
Yeah, pretty much. Yeah.
Or less bullish. Okay.
Chris isn't entirely left out of the technology sector. Thank you. Which one is this one? Is this OpenAI? Is there any other? Let's ask the Chinese models. Maybe the Chinese models have. What did DeepSeek?
Okay, let's ask DeepSeek.
Let's see. Yo, DeepSeek, come on. Got my back, son.
This is Tanner or Steve. Then you're just cooked.
Let's go. Let's go, China.
File attach. Okay. Dell's still moving after hours. DeepSeek is being stupid. It won't let me submit the file. Let's ask Perplexity.
Okay.
Why is it being so dumb? Okay, Perplexity. Perplexity actually is pretty decent for non-hallucinations.
Yeah. Ask it why also. It'd be fun to see.
Mongo's down. Is Mongo losing it? Oh, Mongo just went down. It was up 20. Now it's only up 4. What do they say? Perplexity says Matt. Oh, I'm not sharing it. Sorry. It says Matt.
Okay.
What did Mongo say? I don't know. It's got to be something on the call. By the way, the Schwab CEO just bought 1.8 million of his stock, and the Kava CEO just bought $317,000 of their stock.
Yeah, bro. A lot of insiders have been buying stuff. Norwegian, their Norwegian CEO bought 2.5 million shares. Bill McDermott bought shares in his thing. Like, just everyone's buying. Like, executives are definitely in like buy the dip moment for their own stocks. So
Mongo said something bad, bro. That's a nasty It's about to go red, bro. It's fighting for that last 1%.
Whoa, what happened, buddy?
It was up 22%.
They must have said definitely something on the call. Like, especially like maybe the analyst, maybe they asked a question and the market may not have liked the response. But the thing is, like, I don't get this. Like,
see, we can't have this happen with the software companies.
No, it's not that. It's not that. Like, the reason is like these sell-offs that come like right during earnings like this, right? Is it just like thin volume, or is it just algos?
Bro. You don't get a 20% reversal on volume. There's got to be something they said.
No, I mean, it's thin volume. That's probably why.
No, but how do they pump up 20% on thin volume?
Thin volume.
No, dude. They had a 40%. So they were down 20, then they went up 20. If they're down 20 again, there's got to be something that caused it. I mean, maybe it's volume, but
let's look it up.
No, I don't. There's no reason. I see nothing.
I'm saying, like, does Robinhood Digest help you at all with that?
I can try, but it's super early. Let's see if Robinhood says anything. Wow, yeah, it's getting hit hard. Mongo, no, Robinhood is still saying it's up 20% after earnings. It hasn't even factored in.
Yeah, just be careful of these stupid wild swings. You know, like how sometimes you see the thing dip and then come back up. So it could be that.
Dell still moving.
Dell. Oh no! Hold on. Yeah, what is
hard,
going
folks?
On with MongoDB? Yeah.
Yeah, if that officially goes like red to the point where it's down 10%, it's going to be something they said, because that would be a 33% swing. Dell is just unbelievable, but it's happening, folks. 420 now down to 411, but still up 30%. Kind of feels like they're going to pull an AMD and just go to 500 here.
Yeah.
but massive move after hours with Dell.
Is MongoDB taking out the other SaaS names?
ServiceNow is, yep. I mean, it's not aggressive, but there is that candle. Palantir. This is what I'm saying, bro. I don't even care about MongoDB, but I don't want it to mess up the other names.
God damn it. What the fuck did MongoDB say? You bastards.
This is the vocabulary of someone who has a lot of money in ServiceNow.
After MongoDB. Babe, call your boss. We got to get our job back again.
What is Mongo? Hold on, dude. They're a database. What could they have possibly said on the call? MongoDB initially dumped, now up.
Let's see.
I see nothing. I literally see nothing. I mean, Chris, maybe you're right. Maybe a bunch of people just decided at 5:30 to dump it. But like but you know, like Snowflake didn't see that type of a take profit even after being up 40%. You know, so it's like,
yeah,
and that was up way more than Mongo. So why didn't people take? Like, there had to be something fundamental, I guess, to keep people in there.
I'm trying to see on Twitter if anyone's.
Imagine it goes back up 20% from here.
It could.
Like,
it could. What is going on? MongoDB flying straight.
Oh, no one has it on Twitter, bro. No one has it. Cactus doesn't have it. No one has it. Like, by the way, the reason
on the call. Yeah, sorry.
There had to be. I was gonna say the reason Virgin Galactic is up is because they announced a settlement of derivative actions. So probably resolved either some outstanding debt or lawsuits or something.
Okay.
To go up. Doesn't Perplexity have the live earnings call? Let me see if I can pull that up real quick.
Mongo's bouncing up again?
Is it? Oh shit, it is. Look at this shit. Wow, it's up 6%. It's still down a lot, but
how much of this is how much of this is just fucking market manipulation? You know, just like gotcha, bitch, sell and then buy. You know, like you ever seen like the TV shows where the guy's like, wait,
wow.
Buy. The shit climbs and it's like, wait, sell. Yeah,
I don't know. All right, we will. We'll be back tomorrow. I'm looking at the call right now. I see nothing in the call either.
Yeah.
SMCI is up 9% for nothing. SMCI is up because of Dell. So I don't know if it's for nothing because at the end of the day, if Dell crushed by $8 billion, SMCI is probably going to have some good numbers too. Yeah, I don't see anything in the transcript. I'm looking through it right now. Obviously, I can't read the whole thing, but I'm looking at it. I don't see anything crazy. They did say this implies other revenues will be approximately flat during the second half of the year due to tougher comparisons from the second half of fiscal 2026. That can't be enough to bring it down.
Yeah, it might be. It might be enough. Like I said, the commentary sometimes can. Okay, maybe that's what happened. The initial pop was because they beat by every metric. Look at this thing.
Yeah, and then the other revenues, I guess, is not.
Right here. So the commentary was probably like, hey, listen, we're probably not going to have the greatest thing.
The same beats in Q2, right? Yeah.
Yeah. So it's like beat. And so the market's like, oh my God, everything is good. Everything went up. And then the guidance was probably not guidance, but the future guidance is like, hey, listen, we're going to have some headwinds. And the market just re-rated it down. So, okay, whatever. Cool.
All right, folks, that is it for us. Thank you all for joining. Chris's Twitter, I will put in the chat. Congrats if you are in Dell. Absolutely massive move right here. Congrats if you're in any of these software and fintech names that got a little bit of love by the market today. Can't believe tomorrow's Friday, but it's been a quick week. We'll be back tomorrow for the market open.
Take care, guys. Have a good one.
Thank you, everybody. Appreciate it. See you guys tomorrow morning. Bye, everyone.